You in here, Norok? Quiet. It's quiet for a live stream. Everybody's watching the basketball games today. Football. No. Mm-hmm.
Yeah, I usually give it a minute for people to come in, and then I get to talking. You gonna be here for a few minutes?
Yeah, I'm driving to a wedding with my wife.
Cool. All right. We'll have a little chat then.
I was ready to go. She's got to get ready at the hotel. You know how it is.
I do. I do. Being in a relationship, yes. I'll be back to start in about 2 minutes. All right. What's going on? Let me get my face up here. Okie doke. What's up, everybody? Thanks for joining us this Friday afternoon. I know I was just made aware that some sports ball is going on, so thanks for choosing this. Hope everyone's having a good rally, as the case may be. I think a lot of people may be a little confused as to why this is happening. Well, I have to admit it's getting a little frothy. I'm getting a little nervous. Manaconda, you there? How are you feeling today?
I feel pretty good about it. I mean, it was quite an acceleration, but there's a lot of weird things going on with the Fed's now out of the way and Ukraine's old news. And we were saying a couple of weeks ago, is like if X, Y, and Z is not taking down the market, what will?
Yeah.
So it makes sense that when a lot of the uncertainty got cleared out and the VIX dropped, and you had really negative gamma going into OPEX, that you were going to get. You could have gotten a rally like this. I didn't think it was going to be this high, but
Where did we close?
we
We
are.
closed above 440, didn't we?
We closed the 44.54
Yeah.
chain at 50%, and we closed at 44.5375. So they're a point and a half off on the full 50% retracement of the all-time high to the low. So that's pretty impulsive.
Interesting, isn't it? Yeah, it's in fact that's very common across the board, actually. with a lot of like growth and stuff, like Apple. I don't even have to look at it. I know that it probably goes about 162.5.
I think it closed quite a bit higher than that actually.
Really? Oh, we'll
164.
look at it here in a
Boy,
second. I
it
think
actually recaptured 50% from the recent high. I didn't chart it from the all time high though.
yeah. I mean, right here, what I've got on the screen right now. And by the way, if I'm having any technical difficulties, shout it out. I hope everybody can hear me. Hope everybody can hear Manaconda. Yeah. So this is the FOMC rally that I actually have up on the screen right here. And what's amazing to me is that they were actually, all intents and purposes, more hawkish about raising rates, and yet the market rallied on that news. And it just it doesn't make sense, but that it does not make sense makes it make sense. You know what I mean? It's sort of the contrarian play, actually. Funny enough, that they're going to raise rates probably a little bit more than they intended. I think they were. We went into this year thinking they were going to do it 3 times, and I think now they're like it's 7 or 8. But the market rallies, and the war is still going on in Ukraine. So I think this has been a big validation of why you do not try to trade the news. I just I've never really found much use in it, but I think what bothers me is that people come in and they share news articles and they're confused why the market isn't doing what it's supposed to do according to what the news says, and they really don't have a clue. They're there just to sell advertisements. But there are the reason I've been doing this is because I want to share what I think is actually useful. And again, I'm open to being wrong. I want this rally to continue because I'm long stocks. I think we've got a lot of perma bears out there. Let's just clean this up. We're looking at the ES right now. Let me check. Let me confirm that level that we pulled back to. So from the all-time high down to the low that we made. Yeah, wow, 44.55, right at that freaking level. Damn. This is one of the things that, I use and I try to share with people is just not using all the different Fibonacci retracements, but just the 50% retracement. And man, it's powerful. It's so powerful in what it can, for lack of a better term, predict. If anything, it's just a good line in the sand to go for. I think Apple 162.50. Yeah, that was the halfway point of this maneuver right here. Oh, well, actually, it came down and held that right there. Tesla is a very, very, very important level of 900. That's the past all-time high. It was the 50% of the 2021 rally. Got below it, got a little freaked people out, including me, and now it's come back up to it. So a lot of these recent losers have come back up to a key level that could be resistance, but it's really just going to tell us one way or another. It's basically the halfway point of the whole of different moves, basically.
And
So
you also know that it's not something you use really in New York, but a lot of algorithms and the market in general look at 50 SMAs, and you'll see the NQ, the simple moving average on the NQ, the 50. It closed like right on it, and the ES recaptured it. Tesla closed right on it. Apple closed right on it. Like a very deliberate where the Apple did not close right on it, but like very deliberate where they left things in relation to that moving average with a lot of the big names.
yeah, oh yeah. And just a real quick touch on it. Finally, I've been watching this. This doesn't look like much on the daily with Bitcoin, but this week I noticed something that happened very, very weird on, what was it, Wednesday night, March the 15th? Yeah, or Tuesday night. Tuesday night, there was this volatility spike. And what makes it weird is not that you'll see Bitcoin do this every once in a while or any cryptocurrency, but they all did it at once. And finally, after lagging a little bit behind some of the other altcoins, the more risk coins, Bitcoin has finally broken out. And while it's very, 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 very difficult to try to trade a breakout of something that looks like this, because you really want to break out to break highs and lows, even though I don't like diagonal lines, this is the first real break of something major. Like this volatility quake right here is significant to me. And this break actually right here, We finally got it today. So I think people need to wake up and start looking for opportunities actually in crypto to the bull side. To the bull side. We'll see what happens. It's going to have a lot of resistances here, but I've been watching this since that happened for the last 2 days, trying to make people wake up because you get into a sense of boredom when price is not doing all that much. But we finally got past that 42K level. And so that is actually really, really interesting to me. So I think people have filtered in now. If you have anything to look at, any questions or things like that, I'll give my opinion. And it is, of course, just that. But there are some things I've got on my list to talk about today. We should have a pretty good long live stream, but I will may cut it short to have some quick dinner here in a bit.
Hey, Norak, I
So,
think
yeah, what's up?
if it's not on your list, I think talking about OPEX unwind is probably a pretty interesting topic right now.
Well, why don't you tell me about that? Because I am not, that's not what I'm an expert on. Or do you have something to add to that? Go ahead.
So we talked last month about the OPEX unwind. I think it was in February, or maybe it was January. I think it was February,
Yeah, it was
or
January
the
because I
monthly
remember
OPEX.
we were looking at the January OPEX because January is such a big month. It usually has like the biggest. And so we thought that maybe the gamma, what was it, would pull it towards that level, but it didn't. So go ahead. I remember that. That's
Well,
what I remember.
this this OPEX was even bigger as far as the notional value of the particularly SPY and SPX options expiring today.
Mm-hmm.
So you had a ridiculous amount, obviously, of hedging the past month. And the long and the short of it is, in the aftermath of FOMC, where we had that spike down in the rally, all those positions started to unwind from a market maker perspective. So you've got an influence on the market there, in addition to probably a lot of short covering, where the options gamma is creating a scenario like a cycle where the rips get bought and the dips get sold. And so when you had that rip, it was kind of it can be an exacerbating factor when you've got a big OPEX unwind like that, and you've got market makers, having to press the market up, and you've got a short squeeze going on at the same time, and then some buyer initiative. So long-winded way of saying that, I think the wise move would be to see how this reacts in the middle of next week. This was a move driven probably a lot by rubber band factor and gamma and OPEX unwinds and contract rolls and a lot of stuff that happened this week and a lot of uncertainty removed from the market. But will it stick? I think we'll have to see what happens on the first pullback. We could pull back all the way to 4,300, 4,330 and hold it and still be okay. But I think we'll have to see how that pullback gets defended.
Yep.
That's what's going to confirm it for me.
I would say 4,300 is definitely possible. I wouldn't want to see it come back into the last couple weeks worth of price action. I think things get a little dicey then. Of course, the trade, as it were, was still post 224 right here. When we made that, what I saw as a false breakout, entry point was basically 428. And then this was the games for the last couple of weeks. But this trade is still alive. I still would not be nervous unless we broke the 224 high. But then again, if we pull back too much after having this big of a rally, that makes me really get a little nervous, actually.
I think it's a good time to keep an eye on what the options positioning is now that they've unwound this quarter's positioning. Because for the past 2 years, we've been in a positive gamma position, which basically squeezes volatility to nothing. And now we've been in this negative gamma situation that exacerbates the volatility. So if that continues to collapse, and VIX team would probably love to look more into that gamma positioning and how it affects the VIX. But it could be more of a return to normalcy, which doesn't mean we're going to rally, but you might stop getting these gigantic swings that are pushing the market down and down and down every day.
Oh yeah. Yeah, that FOMC was very interesting. Well, I remember we're watching this. I remember streaming it, and this right here was just what a fake out of fake outs. But it makes sense. This is why I love those false breakouts, because if you look at it on the 1 hour of the S&P futures, you can see it gets everyone thinking one way, and then snaps back up within that hour. I mean, that's just so incredibly bullish. But overall, go back to February the 24th, because we broke that 24th low again. Same kind of pattern that I try to point out to people, where everyone gets in on one side thinking that this was bearish, only to snap back in the other direction. Of course, the lizard people, are going to play games, but then here we come into this situation right here again, some kind of fake out to the downside and just rallies off of that. And where your stop needs to be. Like, in other words, if we break the FOMC low, which I'm gonna keep it my mind open that we could come back down to actually retest that, because if anything from the last 2-3 months from this quarter one 2021 has taught me, is like, don't have an imagination for where price can go. But I would say that the bottom is in for this quarter. I'll say that now. I've always felt the need to kind of hedge, but I've been seeing it, especially in the VIX.
Man, the quarter ends next week.
Go ahead. What's that?
The quarter ends next week.
Quarter ends next week. Yep. It's been
I hope they don't go all the way back down here 1 week. I guess they could.
So, I mean, the really, and this is, I've tried to make videos over the years about this. This is a technique I picked up from my mentor, of looking at the volatility index to give you market timing. Just like any other analysis, is never going to give you 100%. But this time, at least in the last few weeks, the message from the VIX has been very, very clear. So VIX, what it tends to do is spike up when the market goes down. The VIX is, for those that don't know, quick review, the volatility index of the S&P 500 options, basically the closest to expiration 30-day options, the implied volatility. That's what's measured here. And when options go up in value because people are scared that the market's going to crash, they buy more options. The demand goes up. That's what rises implied volatility. It shows up on the VIX. And so in market pullbacks, corrections, crashes, I mean, we can go back here and we can look, this was COVID. Okay, so COVID, we had the high of the market before COVID was February of 2020. And as the market started going down, you had some sustained rises in the VIX. VIX got up to, let's just go back in time here and clean things up. All right, so this was February 28th. So this is long before March. I don't know when was the, do you remember when the 2 weeks to flatten the curve was? When was that? Was that late February or early March?
I think that was the 14th of March.
Okay.
They shut it down.
Right. 14th that would make sense, because people are like, we were still like, what's going on? This is kind of weird back in end of February. But if you looked at the VIX, which was a measure of people's fear, it really is. That's what they call the fear index. You never really got VIX to come back down. In fact, just like everything, I look at 50% retracements. You had the VIX come up, and then it held basically this rally. This is a daily. So it comes down. Maybe the market's going to come back. No, it holds. So now you've got a support on the volatility index. It holds it, tells you this thing is going higher. And so that's exactly what it did up until the market bottom, which was March the 24th. And let me toot my own horn real quick. Hold on. I made a post about this. This is fun.
While you're looking for it, Norak, an interesting topic for next week might be the divergence between the VIX and realized volatility in the SPY in the past two weeks.
Mm-hmm.
Where the VIX was staying elevated, but we're not seeing lower prices.
Yeah.
There's some interesting reading I've done on that. It'll be an interesting topic for another week.
Okay. Well, I mean, the whole premise of people selling options, selling volatility, is that implied volatility is always higher. And this has been, if you're an option seller, I think you should probably take advantage of this market. That's not my strategy. Data gang, it's not my thing. But eventually, that'll be a good thing to look at. Remind me. So this was a post I made March the 24th, 2020. And I was talking about the VIX back then because, again, I'm using it to figure out when is the market bottom. When is fear starting to decline? What I was looking for was a sustained decline. But then I made this comment, and this is kind of humorous. It's kind of a tongue-in-cheek. But I said the bottom might be in, and the key was my oatmeal indicator. This was because oatmeal is something I eat every morning for breakfast, and the grocery stores have been out of stock. But on this date, March the 24th, 2020, I went to the store and they had oatmeal. And that's sort of funny because it really was the sort of return to normal, but it was also the bottom of the market. And that's where the market turned around from. But so the VIX has been really useful in market crashes, market corrections for really figuring out, where's people's fear. And so, with VIX holding levels, and then finally when it broke below in, April, in April of 2020, you got back to a sustained downtrend on the VIX. Well, that would have told you that the market was then coming back. As the volatility begins to come down, 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 the market's rising, fear is abating. And so what happened in the last couple of weeks was interesting because you had the February the 24th market low that rose the VIX up to 39, but then the Russian invasion spiked the VIX up again, but it was a lower high. There wasn't more market fear, wasn't more options being bought, and that was significant. And then, of course, we got one more final spike in the VIX on March 8th, which was even lower still. And then finally, you had, again, a technical setup where from the March 8th high to the little rally we had on March the 11th, I noted this on the Discord the night because I was looking at it that night. 33.18 was the actual level, and VIX held. And from that point, there you go. I hope that makes sense to people because I really think people, instead of, I even made a post that was titled "Watch the VIX, not CNBC," because they're going to sell fear to try to get this volatility up. But if you just look at it, chart, I believe that price is truth because this is what people are willing to buy or sell something for in the moment. Like this is not, well, maybe the lizard people manipulate it, but this is the best data that we have for what is true in the market. And so trying to look for patterns and measuring the movement, the speed of price, I think that's the best thing we have towards truth. And it's a really good indicator. And I know a lot of people kind of poo-poo technical analysis as astrology, but that's because it's not predicting the future. But patterns like this are useful because they tell you something. They're data points. They're much better than listening to some person with an economics degree that he's right maybe 1 out of 12 crashes that have happened. So that's my spiel. All right, let's check the chats and stuff like that. So Bitcoin isn't going to 20K. Not yet. Not yet. I'm going to talk real quick about later on. I'm going to talk about this article that I had a opinion about that someone posted to another group, a Bitcoin Maxi group. Those folks that believe that Bitcoin is the only sound money and every altcoin, including Ethereum, is a shitcoin. I went to an NFT meetup last night, and I knew what NFTs were, but I know they're kind of campy, but they're kind of cool. I really like the use case. So I like that blockchain is being used for all these additional usage. And I think Bitcoin maxis are, I'm not really sure why they think that coin needs to be the only coin. I don't understand why it has to be mutually exclusive. So let's get into that. Let's get into that. So this was an article that was posted by Arthur Hayes on Medium, cryptohayes.medium.com. And the high points really are this. He wrote this on March the 16th. So that was 2 days ago. And what he called was the current petrodollar, eurodollar monetary system ended last week. That's a bold statement. If you don't know, was it since the 70s, pretty sure on that. I know my history on that. The U.S. negotiated with the House of Saud and OPEC as an extension that oil was going to be bought with dollars. We went from being the dollars being backed by gold to really the dollars are backed by oil. And that's been the way that we've operated for the last going on 50 years now. But what he's asserting here is that trust has been eroded because we kicked Russia out. We basically said, we're not going to trade with you. Now, I can see how you would think that this system's been going on for a long time, but I have a unique kind of perspective about Russia and their finance because before I traded, stocks and well, I've been trading stocks since I was like 17, but what I really cut my teeth on was forex. And one of the trades that existed in 2009 was the ruble. After the bond default of Russia back in the 90s, they had to issue rubles with a very, very high interest rate. They had to offer a attractive interest rate to get people to invest in their bonds and their currency. And so what you could do in forex is you could initiate a carry trade where you just had an open US dollar ruble position and you would earn interest. And of course, with forex brokers, they'll let you leverage up, and so you can turn that 11% into a lot more. I could not stand the volatility. That really shook me out. And so that, if you just stuck with it, you would earn that interest. But I found out that kind of trade wasn't for me. But I knew why I was getting paid to do the trade was because of this. And so the point of that is Arthur Hayes, being a finance guy, should know that Russia's been a pariah of global finance for a long time. I don't think anybody really takes them that seriously. That being said, yes, they got kicked out, and that's not good. But it's not necessarily the cataclysmic event I think he's making out to be. That is later in getting to the point that, okay, now that the petrodollar system has been destroyed, countries are going to have to trade oil using sound money because they can't trust the dollar. So they're going to use Bitcoin and gold, probably gold, but they'll eventually come around to Bitcoin. And they're in this conclusion that you're going to need banks and stuff to hold Bitcoin on their balance sheets. I don't think that A really equals B. I mean, there was another point in here where he taught, like, where was the he makes some very good cases using economic data for what, if a certain percentage of reserve currencies were converted into Bitcoin, what that makes Bitcoin worth. And he's got a target of gold at 10,000 and Bitcoin at $1 million. I don't like these arguments for the simple reason that I think they're obscene. And I use that word carefully because it's very, very simple. They are printing more dollars, but they're not printing more Bitcoin. The fiat relative, the US dollar value of Bitcoin will go up so long as people value it. This will just happen with the passage of time. We know inflation is a thing. We know they're going to keep printing dollars. So we know that the value of Bitcoin will go up. But when you start telling people that it's going to go to $1 million, they get in their heads, oh, I'm going to 20x. So let me throw all this money into it. And then when it doesn't happen, they panic and they sell it, and you create these crazy volatile swings. If you just leave it alone and not write articles like this, trying to get people all pumped up, you wouldn't have these crazy cycles that create the volatility. So that's why it's obscene to be telling people these numbers. It's very simple. You don't need banks to adopt it. You don't need mainstream adoption. You don't need institutional involvement. It's just going to kind of happen so long as people still think Bitcoin has value. And the only way that's really going to change is if people get bored or they get dejected. So literally by doing this, you are creating the seeds of a potential downfall. That's what I really believe. I really wish he would just shut up and just let things happen as they were. I had a conversation with somebody today about, Bitcoin, and this is a long-term holder. I respect him a lot. He has no stocks. He rents an apartment. He doesn't have real estate, and context clues led me to believe that he is a very, very, very crypto wealthy person with a very simple life. I respect that. But even he acknowledges, and a lot of people have kind of derided me. I remember I gave a talk last year during the downtrend we had about the leverage situation of Bitcoin. And I mentioned what would happen in the event of the dollar failing and the economy coming to a screeching halt, a big crash or something like that. What would happen is Bitcoin would fall more than the stock market. And when I said that, people in the room who were Bitcoin maxis, I was speaking to a hostile audience, they were, oh. Here's the truth. Again, price chart. From the February 2020 high, down to the low, the COVID low, Bitcoin fell 61%. The stock market in the COVID crash, it fell only 36%. Bitcoin being more volatile, and yes, it is a risk asset. People see it as a risk to take in Bitcoin or to take in Bitcoin. It's more volatile. You have a bigger movement. Twice. I don't know if it has twice as much volatility as Bitcoin, but it moved twice as bad to the downside. And this is what will happen. I can say that with confidence because people will get scared and they'll fly out of risk assets if we have this big crash that everyone's predicting. And I don't know if it's going to be 61%, but it's going to be pretty big if and when this happens. And so that's why I don't have any rush to go buy Bitcoin or even dollar cost average in. I mean, okay, if you want dollar cost average in, that has worked for the last 10 years. I'm not going to knock it. If you come to me and say, I want a dollar cost into Dogecoin, then I'll call you silly. So if you want to do it that way, if you don't want to try to time the market, that's fine. But if the past is the best we have to go on, and we can look and see how market participants acted in a time of panic and crisis. They sold their risk assets. Now, this may all be different because this time it may be different because, after all, the US dollar is failing. And when this happened during the COVID crash, well, interestingly, at the beginning of the COVID crash, the dollar went down to March the 10th, and then it shot up. We're looking at the dollar index right here, up. So people, to the height of fear, what they wanted was the world reserve currency. That is what they flocked into. They didn't flock into Bitcoin. They flocked into dollars. So if dollars are failing, if that's a thing, then I don't know what this is going to look like. It's going to be different because this time it's different, of course. But that's why I'm in no rush to try to jump into Bitcoin at really any price until we get down to about 17K. And interestingly enough, if the market were to crash, as some people still think it is because there's some perma bears out there, then I do expect that we would see possibly that 16% run down, which would probably take Bitcoin down into the 20s or something like that. From where we are. If we had a big crash, a 61% move would take Bitcoin down to about 17K, which is incidentally what I am actually targeting if we are in a crypto winter, which means that Bitcoin comes down from the high 75 to 85%. It's happened 4 times before. I've been through all of them. That would bring us down to about 17. That's when I start getting interested in Bitcoin, actually. I'm in no rush before then. And that's coming after I said that I do expect a bull rally in Bitcoin right now. And this has been my crystal ball. This is just my opinion. Everyone has their technical analysis. But to me, what really failed this current bull run was this false breakout right here we had in November. Try to let people know. And right now, what it looks like to me is you have a high here, a shoulder, a head, and we're probably going to make another shoulder, possibly up to 60. This is what I've been looking for. And at that point, if that holds and we don't make an all-time high, then we engage into the crypto winter. So this is what I've been looking at really since about December, January, when we had that US jobs report. And it makes a lot of sense. If the stock market, which has been very correlated to crypto over the last few months, I mean, the correlation really kicked off. All risk assets, all growth really started falling off in November. So that's really part of it. But the U.S. jobs report is this big red bar. It was on December 3rd. That was when it was forecasted that the Fed was going to raise interest rates. Like it or not, low interest rate environment has put U.S. dollars into Bitcoin, pumping it up. So I still expect that if we're going to get this, if everything is still correlated, if the NASDAQ goes up, if stocks go up, then you're going to see crypto rise as well. And then once it rises up to try to retest the highs, that's when, as a trader, I'm going to get very active A lot of long-time hodlers, they're going to do their thing. But what I would really encourage people is to look at this until we make new all-time highs, 70K, which I know everybody wants. Wait for confirmation. You can be patient and actually make money. I'm serious. I got okay. That's the point. Wake up about Bitcoin, and I'll segue into something else. Amazon this week. Amazon, I got very, very upset with myself. I don't know if I talked about it in the last live stream. Probably I did because it was definitely on my mind. I've been encouraging people in these live streams and my weekly sessions to chart out the COVID low of March 2020 up to the all-time high that every freaking stock out there has made. It's all pulling back to 50% retracements. Not all, a lot is pulling back. And there's been so many opportunities out there. And one, which was patently obvious to me, saying this is my thing, I should have done anywhere between now and November or even July, is drawn that level. And that level on Amazon was, let's call it 2,700. It hit the level March the 8th on this dip we had, that last spike in the VIX, 2 days before they announced that they were going to do a split. Now, in the last 2 years, Tesla, Apple, Nvidia, big stocks had splits, all had rallies. That's what I'm expecting in Google. That's what I'm expecting in Amazon. And so when it shot up after that announcement that they were going to do a split on March the 10th, I facepalmed. But that's okay. I set the alert for just the 50% of that move up. And I was lucky enough. It didn't even really come back to fill the gap. I know a lot of people like gap fills and gap levels, but the people that were waiting for a gap fill on this news right here did not get their entry. But when it pulled back to here, triggered an alert, there was even inside the 50% pullback to this level, there was even another 50% pullback right here on March the 14th when I was able to pick up Amazon. And not trying to jinx my rally, but I was patient. I felt like I missed it. I was mad at myself, but that was all unnecessary. I just had to wait for an opportunity. The market will give you an opportunity. You will not miss it. Same thing happened in Kroger. Kroger was one I posted about. I try to post my stories to kind of help people because I struggle with a lot of this. Everything that everyone struggles with: impatience, fear, greed, ignorance, hope. I'm human. And Kroger was a stock that we talk about on Discord a lot because Jen, he loves his Kroger. And it's crazy the grocery store behaves like what looks like a meme stock or a crypto or a shitcoin. But they had this move down in December of 2020. And I had this feeling on this earnings, wow, I really want to buy Kroger because Jen talks about it a lot. And I really just want to go. I really just wanted to buy it. Well, I didn't. And that was the meme stock mania of 2021. Missed it. Oh man, that was hard to watch. But I waited. I waited patiently. I waited patiently until, let me see if I can bring up the idea here in TradingView. Yep. So yeah, as I said, I've been patiently waiting to enter Kroger. It set up a spike. This is the thing that I scanned for. I have the alerts going to my Discord. By the way, this is a plug. Check the link, join the Discord. It's free. The reason I do it, the reason I put this alert on there is because I want to crowdsource opportunity collection. We're going to talk about Palantir here in just a second because this is actually, Palantir is not something that I particularly care about, but people that I talk to every day, my friends on Discord, they do. And so I added this to my alert system and it gave a great opportunity. And I wouldn't have known to look at it. I wouldn't have added it to my system if they didn't tell me. So come hang out. I don't charge people with Discord because I think that's silly. But this was an opportunity that finally happened. It was a signal that I looked for, a signal that I was waiting for. How many months was this after? This was October of 2021. So almost a whole year after I've been watching. And yeah, of course, I saw this and I was definitely like, ugh, groaning at missing it. But the market has a tendency to give you an opportunity again. It really actually does, especially on high flyers. And I'm sure a lot of people are learning that now in this pandemic round trip about the stuff that was really, really hot last year. Yeah, you're getting it cheaper now, aren't you? So this was the level right here. It happened to be a very good one. And of course, now I'm in Kroger. I'm in a stock I shop at every day, not every day, well, every week. And it's just ridiculous what they're doing. And I think it's a great company to have a long time. And I just had to wait almost a year. Yeah, I got it at a less good price than I did at 31, but I'm glad to have it at 39 when it's now at 56. And that all comes from just being patient and not trying to jump in at a FOMO. I mean, that was another thing I've been studying this. I like to go back in history, long-term history, and go back and look at. Here's homework for everybody. Go back and look at Amazon. Amazon has a very rich and long history of price going back to the dot-com bubble, where everything that had a dot-com was incredibly valued. Now, here's the thing: if you would have bought Amazon at $100 a share, you would have been okay now because it's at what 33,000, 3,200. You would have been fine. You would have been fine 20 years later, but you would have had to endure a 94.71% haircut from top to bottom. Well, I mean, let's say that you caught it on the rally coming up. Okay, let's say you caught it at like 25. You're like, okay, I gotta eat Amazon. Well, at some point, that was maybe about 2003, 2005. The market gave you another opportunity to pick it up at $25 a share. I'm not sure if they split yet, but we're just going to use these numbers. And let's say that you missed that again, and you bought it, on this breakout right here, this FOMO 60, or you bought it, oh, I'm going to miss it. I got to buy it at 92. Well, 2008 came along and would have given you Amazon back at 35. Now, since then, there hasn't been quite the kind of dips. But the reason I studied this, I mean, there's COVID, of course. Was that COVID? No, that was February 2016. See, even these stocks that are just amazing and everyone wants to be in, including Apple. I've done this before. I know I've talked about it. Apple has had a lot of 30 to 40% pullbacks in its 20-year history. So I think that whenever you think that you need to jump into something because you don't want to not miss it, go back and look at Amazon and Apple for the last 20 years and ask yourself, do I really need to buy this rally? Or if I'm patient, and yes, it may take years, can I get a better entry? And the way that when I'm looking at this is also, let's say that I had bought Amazon at any of these periods. How am I going to hold on to a growth company through these kinds of crazy swings like 2008, when the whole market just absolutely took a nosedive? Everything was down. Every valued companies were down 40, 50%. I mean, this is a question that I've got to find out for myself in temperament, because I do want to start getting into more of these growth stocks, especially now that they're at much cheaper valuations, and especially since no one's talking about them anymore. I like that. I like that a lot as a contrarian. I like it that I posted the Palantir trade, which let's talk about that since we're talking about growth. So Palantir this week, I posted, and this was, again, a crowdsourced trade because I had added the spikes on these to my alert system. I wouldn't care about Palantir. I mean, for me, no one can really tell me what this company does. Software, something software. Okay, cool. All right. And they're going to be worth, $1,500 one of these days. Cool story, bro. All right. I trust y'all's analysis. Okay. I'm going to look for setups. I'm going to look for technical setups to get in. And so finally, you got one to start out with on 224 when we had the Ukraine invasion. Spike down, false breakout. I like it because it's at this key $10 psychological level. Didn't necessarily like this one itself. In fact, it didn't actually do what I'd like to see, which is give you a pullback to that level to rise from there. But finally, it did come back to that level, give a 30-minute spike signal, which now, because paper trade Sherpa, yeah, that's your, where is it? Yeah, paper trade Frank now. Okay, he told me he wanted me to watch for Palantir. I put this out there. I said, hey, anybody want to watch anything? I think he was one of the only one or two people that said, hey, watch this stock. I was like, put it in my code, put it in the system. There it sat for where is this? Where was that alert? That was yeah. He asked for that back in January, and I made sure to give him props. I was like, "Hey, dude, thank you, because this triggered an opportunity." I actually kind of got a little meme YOLO on this. I took some January 2024 calls because everyone says long term, long term. I'm just trying to be part of the cool kids. But it's a good start to a trade. And if I had to do it again, I probably would have taken some shorter term that I could then close out so that I have a free 2-year trade. But we'll see. We'll see what happens. But it's interesting to me when I posted this in this new Discord that I've been doing contributions for. I've been making YouTube videos for Best of Us Investors. I go back through the chat, and all last year, every day, people were saying Palantir, Palantir, Palantir. I'm DCing in, I'm DCing in, I'm just buying more Palantir. And then finally, when I come in here and I say, hey, here's a setup, crickets. It's so interesting how market psychology works, how people are so interested in something here. They're really interested here. They're still kind of interested here. They're still kind of interested. They're still kind of interested. They're still kind of interested. But when we get to here, silence. But it may go down in half to $5. We don't know. How much lower can stock go, right? So anyway, that was a good pickup this week. And again, it's not because I'm super smart. It's because the market is rallying. But there are reasons. I mean, everything, all the winners, and this is what I kind of, we're talking about, Manikan and I have had this discussion. He dropped off, but on January 4th this year, we were both chatting with each other, and we were all our portfolios, which because it's 2021, we had a lot of winners coming into the year. We had a lot of growth, a lot of tech. Our portfolios were up a lot. It was probably one of the highest single day up moves that I would have experienced in 2021 was January 4th this year. And we sat there and we were like, this is kind of weird. But we both, at least I did. I hope he did something. I did nothing. I was like, let my profits run. Well, yeah. When you are really happy with your position, plural, or any position, you're at the maximum point of emotion. Just remember, when the market goes down or you're in some stock and it hits a bottom and you can't take it anymore and you sell it, and that ends up being the bottom and it reverses, it's not because the market hates you, it's because you are the market. If you are in a position and you really, really like it, like this is a great position, wow, this rally, I'm so freaking smart, it's probably a top. So that being said, as this rally continues, I'm starting to get, as a contrarian, I have to doubt everything. I have to assume that everyone is wrong. And so as this rally continues, I'm being very careful to take the meta-analysis of what people are saying. I like list. I like perma. I really like perma bears because they are the ultimate contrarians. I enjoy having them in my community and listening to their opinion. And I don't want to think that they ever have to mince words with me. If I'm wrong, then tell me I'm wrong. Give me your opinion. because ultimately it doesn't matter what I say. It doesn't matter what you say. The market will decide who's right. That's a fundamental principle of mine. But going back to that, 4 up days after this big face ripping rally, I start to get a little bearish, honestly. So as I look at these that have been winners, and that's another thing. Let's just go back and look at a couple of things. So another one that I posted this week, Coca-Cola. I'm very mad at Amer because he wasn't able to hold a long-term trade. Coca-Cola, 50% retracement to a support level, to a former all-time high. Bread and butter, fantastic on sugar water, great opportunity. Target was another. It was another spike trade. This was another alert that came through in a stock that I want to own. Again, you had this earnings rally, which is big. Oh, we're going to talk about that here in a second. It's going to be very important coming into 2022. Pull back to 50%, gave a spike, boom. And I know that these are all hindsight, but again, this is a plug. These are all posted. And also, bull market rally. So I'll admit to you, these last couple of months have hurt. It's nice to have some wins. We'll put it that way. And so what else? AMD. AMD was another one. Gave me a little bit of grief, but it's doing pretty well. Palantir, of course. And Waste Management was one that I picked up back on February 24th, as well as Google. And Google is holding us February 24th as well. Okay. So the reality is that I'm prepared for is that those are going to be my positions for the year. And we may or may not get a pullback for others. That is entirely possible. I'm always going to be looking for opportunity. I'm always going to be taking trades, but none of them may be as good as what you could have gotten in March. Sorry. That may be the reality of this year. Maybe not. But what's going to be really important is now as we go into a market that has a little bit less uber bullish optimism, because we had 2020, we had 2021, everyone got into this sense of complacency that the market only go up and to the right. Now people have realized like, oh wait, maybe that's not always true. You're not going to have that same kind of just euphoric buy it and leave it alone. It goes back to what I've been saying since the end of 2021, that this market, this year, or rather 2021, up and to the right with a few pullbacks, reminded me of the 2017 market. I say this all the time. 2017, post-election, with the president and unified Congress, statistically speaking, up and to the right. Blow off top in January, big crash in January. And what that did was that set up a 2018 of some really choppy markets. Still made a new all-time high in 2018, but then come Christmas time, or rather in October, you had an even bigger drop. Not saying that's going to happen, but I'm definitely watching for it. And then you can go about your normal bullish business. But 2022 comes off of a super bullish year. You had a correction. I will say this here, it can change. I will say that we're probably going to make a new all-time high this year, mid-year, August, September. Don't hold me to that, and at that point, be defensive. But I do think that this was the correction for the various reasons I've talked about earlier. False breakout, volatility rising, and this face ripping rally. So the point of that is, and this is also how I trade, because 2018 hurt me. 2018 January crash hurt. But I made it back in the crash later. But one way that I kind of treaded water was looking for opportunity in individual stocks. You're not going to have the low interest rate. You're not going to have the bullish momentum that you're going to have going into, especially the summer months this year. You're going to have to look for individual opportunities in individual stocks. And the way you're going to do that is you're going to look around earnings. You're not going to buy options the day before earnings. I'll kick you out of my Discord if you do that. That's stupid. You're just going to lose money half the time. It's a coin flip. But there is money to be made in post-earnings pullbacks and pre-earnings rallies. So no to buying options the day before earnings. Unless you're just a gambler. If you want to gamble, fine. That's why I'll have tolerance if you come to me and say, "Hey, Norok, I just like this company. I just like Starbucks because I like their coffee. I'm going to buy a call going into earnings." Fine, your money. But if you want to have a consistent strategy, you want to buy options in the weeks up to earnings because you'll get that volatility rise that will offset your time decay. That's one benefit of it. And typically you have a major delta movement. Typically, hedging my words, find opportunity. And then after earnings, earnings will give you that big move typically, but then you have to wait for a pullback. We saw that in Amazon. You had that big news announcement, which is a catalyst. So basically, what I'm saying is you got to look for catalysts in individual stocks because the S&P 500 as a whole, it's going to eventually get down. Like we've had these 100-point moves in a day, 120-point moves. You have these trends intraday that are really good to trade. That's going to shrink. That's going to get down. You'll have 20, 30-point S&P 500 days in the summer months. It's coming. It's not fun to trade. And so what you have to look for around earnings seasons and catalyst is pullbacks. There was one that was in UHS I noticed today. TradingView gets kind of a little nasty in the intraday price action. On Thinkorswim platform, this was a lot more clear. And on the day in question, you'll notice how today's price action on TradingView is very concise. The bars, they're kind of connected, opens to lows and stuff like that. But in the past, it gets a little messy. Little weakness here in some stocks. But what was happened on Universal Healthcare Services, UHS, was you had a pre-earnings and a post-earnings jump. And then actually, you can't see this on TradingView, but there was an actual pullback. It was actually on their dividend payment to a 50% of that earnings move. And then that was opportunity. And that was actually coming, of course, that's coming off of the February 24th low. But this pattern, a post-earnings pullback, is very key. I remember this off the top of my head because this was one of those 2018s that really helped get me back in the game. This was Take-Two Interactive, a gaming company. Let me find it from there we go. Okay, so Take-Two Interactive had a earnings announcement. This was mid 2018. My account was still down. I'm still trying to make back my January losses. And it popped up on earnings, and I was scanning for particular pullbacks, 50% pullbacks. And so what happened was I waited, and eventually you got a pullback 2 days after earnings to a 50% level, 120 on Take-Two Interactive. And that's set up for a really nice short-term call trade because after earnings, that volatility crush happens and earnings go back to normal in terms of pricing with volatility. So it's a lot more advantageous to buy options after earnings, after the volatility is crushed, or well before the volatility is rising. And that's how you want to play earnings. So this year, don't know what the future holds, but this is my experience I'm sharing with you. If we just have a very small kind of just cautious little uptick in the market, then you're going to have to find opportunity in individual instruments. And the way you're going to do it is around catalyst, earnings events, some news, some product launch, etc., that are going to create movements in the stock, and then you're going to trade around it. And so that's where I expect that the opportunity is going to be in 2022. And it means you got to do work. You got to do homework. You got to watch all these stocks. You got to set alerts. The market, the easy money of the last 2 years, it's gone for now. For now, this is going to be tough. It's okay. This is what's this was where everyone throws money in the market and they win. This kind of market, and it happens after every cycle like this. This is where the traders get sorted out. This is if you want to do this, if you want to beat the market, this is your test this year. If you can survive this, if you can come back, this is your test. that's my message to folks. And I've got to wrap things up because I got to get on the road. But let me check the chat real quick, see if there's any comments or things to look at real quick. All right, let's see. Penny stock level. All right. Yeah. Join the Discord. And I'll point you. I have them into the alerts channel in Discord. There's a lot. I'm trying to filter out the signal to the noise. That's always a problem. But yeah, it's a work in progress. So I'm going to end it here. Thank you all for joining me. I really appreciate doing this. To the few people that do it, I'm gonna be working to get this message out to more people. I've been very galvanized by the recent events. There's a lot of people that are sharing some really bad information out there and making people miss out on making money. That's what I believe, because fear really sells. People can make a tweet about how the world is ending and it's going to get shared 100,000 times, but someone can say, market, world's probably not going to end, and nobody's going to retweet that. So have a good weekend, everybody. Look forward to sharing my weekend analysis with my levels, and we'll be back again next Friday. Join me. Come talk to me on Discord. One of these days I might shut it off and charge for it, but nah, not right now. Get in while you can. See you guys later.